The cross-currency pairs, or cross-rates as they are also known, combine currencies of the major economies, but they do not involve the US dollar. For example, the euro to the British pound, the euro to the Japanese yen, the pound sterling to the Japanese yen, the euro to the Swiss franc, the Australian dollar to the Canadian dollar, and the euro to the Canadian dollar, to name just a few. As they do not include the US dollar, they are less traded with lighter volumes and are less liquid compared to the majors. They are more volatile, offering good trading opportunities. At the same time, good risk management rules should be in place to cater for the sudden price fluctuations and the wide swings. The cost of trading the crosses is a bit higher than the majors.